Hello, good afternoon, ladies and gentlemen. Thank you all for joining us for today's session. We really appreciate your time. For those that attended the previous session, we really want to appreciate you. And those that are also here, if you had attended the previous one, you're here again, you are the MVP. Thank you so much for joining. My name is Kunle Keshinro, and I'm going to be your host for today. Thank you for joining our session today, which is making the best of your post-work life. And today we'll be focusing on basically on how to access your pension. Thank you so much all for joining once again. These are the objectives for today's webinar. What we did last week was about the insight on how to manage your health and social engagement ahead of retirement. Today we'll be talking about application and documentation process required to access your pension benefit at retirement. And next week, we will be having the financial fitness towards retirement. So please, for everybody that has joined, please put it down on your calendar to attend the session next week. This actually shows the schedule of events. What we have on our screen, I talked about the schedule of event, what we had last week, what we are having today, and what we'll be having on day 3, which is next week. It's going to be about fitness while in active service and at retirement. Please, we beg you to make it a time. Please note it down on your calendar to join us next week as well. So we'll move quite quickly today, so that because we have quite a lot for you today. So once again, we want to thank everyone for joining us. At this point, I will be quickly introducing our Executive Director of Operations, Charles Emilio, who will be taking us on the welcome address. Charles, over to you, please.
Warm afternoon to everyone that is on this call. My name is Charles Emilio, as Keshiro introduced me. I'm the Executive Director in charge of operations in Stanbic IBTC Pension Managers. I want to seize this opportunity to thank you very much for taking our time out of your very busy schedule to attend this pre-retirement series, which we have rightly themed, making the best of your post-work life. Now, someone once said that the key to peace and fulfillment in life is not in spending time, it's not in spending your time, but rather in investing time. And I can assure you that the time that you have spent with us, the one you spent last week, the one you will be spending with us today, and the one you will definitely be spending with us next week, they are all worthwhile investments that will work for you, not only now, but also into the future. Now, in order to fulfill the purpose of this engagement, we are aware that most of you might be retiring soon. For some of you, you'll be retiring in the next 5, 10, 15 or more years. So we have considered it necessary to start engaging you so that you can start planning early. Now, some of the learnings, some of the things that we'll be sharing with you are actually based on experience in the field that we have seen some of our clients go through. And we can only get better in making the experience better and more pleasant for our retirees as our clients as they move towards retirement. It is important for me to remind us that this engagement has been structured to happen across 3 series. Last week, some of you were in attendance, and we shared insight on how to manage your health and social engagement towards retirement. The session was delivered by our expert, and we hope that you found that session very insightful. Today, we'll be addressing something that is very, very important, and that is how to assess your pension benefits at retirement. Our facilitators, we take our time to explain the application process, the documentations that will be required. We believe that today's session will, in no small measure, help you to prepare and understand the processes required to assess your pension benefits. We don't think you should wait until when you retire before you know what is required for you to assess. This will give you a better head start and ensure that you have a seamless experience through the benefit application process. Now, the third one, which will be happening next week, Thursday, between the same hour, 1 to 2 p.m., We'll be focusing on financial fitness towards retirement. I would advise that you block your calendar for this session, as we'll be sharing some very useful insights on financial planning towards retirement. Now, prior to 2020, we would usually deliver this event, this engagement physically at clustered locations across the country. However, based on our present realities and the need to adhere to COVID-19 protocols, we have chosen to deliver this digitally. This is our way of ensuring that we keep you safe in this pandemic. We are also hopeful that we'll be able to, in the near future, return to physical events where we'll be able to interact, in our engagement with you. We just pray that it's not protracted. Thank God for the discovery and the administration of the vaccines that is ongoing. Now, in the meantime, I want to encourage you to use the question and answer section, labeled Q&A segment of the platform, to ask as many questions as you possibly want to. One, this will make the engagement, interactive, and we have very capable support team at the background that we man this platform and ensure that you get response to every question that you will ask today. Intermittently, we might be voicing over some of your questions towards the end of this session. So please, let's make it very interactive. Somebody once told me that there is nothing like a stupid question. The only question that might translate to being stupid are probably the ones that we never get to ask. Now, I want to thank you once again for considering us to be worthy to manage your pensions. And in closing, I want to assure you that we not only walk this long road with you as partners, but we are committed to ensuring that you retire well. Thank you so very much for your time, and let us enjoy this session. Over to you, Keshinro.
Yeah, thank you so much, Charles. Thank you for that wonderful welcome address. Just like we've all heard from Charles, it's meant to be quite interactive, and we want to appreciate you once again, for taking time out to join us. So please remember to use the Q&A icon that you see on your screen to ask as many questions as you may wish to ask us, or any inquiries you may have. Please feel free to type them out, or suggestion as well. Please feel free to type them out on that Q&A section. I will be more than willing to address them during the Q&A segment. Like Charles has said, we also have some of our colleagues in the back end that we will be attending to those questions. And at the end, when we have the Q&A as well, we'll address a few of them that perhaps we may not have answered during the session. So once again, welcome everybody for joining us. Now we'll move to the first aspect of the session today, which is on how to access your pension benefit at retirement. Shortly, I'll be calling on my colleague who will be addressing that topic, Adetola Adewoyin, who is the head regional operations Stanbic IBTC pension managers. He will be doing justice to this topic. Tola, over to you, please.
Thank you very much, Ole. Good afternoon to our clients, our valued clients on the call. We welcome you once again, and as Charles had said, we count it a privilege that you are able to spare us some time out of your busy schedule to join us for this session. I'll quickly go right into it. In any pension system, the ultimate goal and one of the major KPI all over the world is how well and how seamless contributors are able to access their benefits when it becomes time to do so. And for us, it's not different. All that we've always focused on is to ensure that our clients, when it's time for them to retire, they are able to transition seamlessly into that post-work life that is when it's time for that to happen. And this session this afternoon is one of the things that we do to make sure that we are able to realize this objective. So in getting ready for retirement, there are certain things that are very critical. Like Charles mentioned earlier, based on what we have seen over time. And this is also part of why we are having this session. And some of these things are what I'll be talking about right now, in terms of getting your details up to date with us as your pension fund administrator. From time to time, there are updates within the industry that we pass across to our valued clients, whether via email, whether via SMS or surface mail. And those information, they are very critical to getting us ready when it's time for retirement. So we want to be able to reach you at every point in time. We want to be sure that your information with us, whether it is date of birth, whether it's the name, the way we have it on our record, are up to date. And if any of such needs to be updated, probably because of changing your status, it's important that that is done well ahead of time so that it don't become an impediment when it's time to access benefits. Also, we are where some of our clients are within the public sector space, whether it's state or federal, and there are processes for verification, processes for clearance that happens oftentimes a year before the retirements that are conducted. We've seen instances where some of our clients missed out on these exercises at their MD, ministry and departments and agencies, and that caused some kind of delay when they were now coming forward to access the benefits. So it's important that we are informed, we are aware, and then we participate in all these exercises. Also important are the documents that we need to get. They will be talking about the checklist along the line. In accessing retirement benefits, there are two major conditions that the Act stipulates. And the condition is that to access retirement benefits, the contributor must have retired from active employment or attain the age of 50, whichever comes late. Whichever comes late, the contributor must have attained the age of 50 or retired, whichever comes late. What that basically means is that if I have attained the age of 50 but I'm still in active employment, I would have to wait till I retire from that active employment before I come forward to access retirement benefits. Or on the flip side, if I am out of employment, I've retired, but I'm not yet 50 years old, I'll wait till I attain the age of 50 before I can then proceed to access retirement benefits. Broadly, there are two major withdrawal modes available to contributors that are retiring. There's what we call lump sum and program withdrawal, and there's also what we call lump sum and annuity. These two are options that an intending retiree can choose from. It is devoid of any imposition. All we do as your PFA is to let you know the features of these two so that you can make an informed decision. There is a third withdrawal mode that we call M block. The M block option is not by choice, it is by condition. And what do I mean by that? For contributors that have retirement savings account balance of 550,000 and below, such amount will be paid to them in one lump sum. So we're paying everything to them at once, and such category of people will not have the privilege of making the choice between program withdrawal and annuity. So that's why I said that is by condition, it's not by choice. Moving on, the features between the program withdrawal and annuity, these are very germane in helping our intending retirees to make an informed decision as to which option they want to go with. And I'll quickly speak to it. For program withdrawal, under this withdrawal mode, a retiree is expected to be able to access a minimum of 50% of their final salary as monthly pension. So what this means is that if I'm currently, before my retirement, I was earning 100,000 as my total emolument. When I retire, it is expected that my monthly pension should be able to pay me 50,000, which is 50% of my final salary. Also, under program withdrawals, contributors are expected to be paid over a specific lifespan, of course, with an increased income over time. Because under program withdrawal, don't forget the PFA, we invest this money. So even when you are retired and you have started collecting pension, you still continue to see your account statement from us on a quarterly basis, where you will see how your monthly withdrawal is done based on the view of the account, and you also be able to see how the balance that is in the account keeps growing from time to time. Also, for program withdrawal, any contributor that is retiring and going for this option, one of the features that is also available is the fact that the beneficiaries, if in the eventually that the contributor passes on, that's the retiree, the beneficiaries are able to come forward and assess whatever balance is remaining in the retirement savings account, of course, based on legal documents identifying them as the beneficiary to the deceased client. Also, the option for program withdrawal entitles retirees that are taking this option to assess to qualify for what we call monthly pension enhancement. That monthly pension enhancement, what it does is basically a review that is done from time to time. Currently, we do it on an average of every 2 years to look at the accumulation of interest on the account. And based on computation, if it qualifies a retiree on program withdrawal, the monthly pension is then enhanced. So someone that was already formerly on 50,000 naira per month, based on the review and the enhancement, can then start collecting 65,000 naira. This was an initiative that the Commission championed, and we've implemented 2 cycles of enhancement already over time. On the flip side, Annuity also pays a minimum of 50% of final salary as monthly pension, and also it is expected that the retiree or the annuitant is paid till death. I mentioned the beneficiaries to deceased retiree under program withdrawal being able to assess their the balance in the RSA in that eventuality. Under annuity, the beneficiaries are only able to lay claims, and they are able to make claims where the retiree passes on before the guaranteed period of 10 years. If the retiree passes on after the guaranteed period of 10 years, of course, the beneficiaries will not be able to make any claim to the insurance company. Program withdrawal is regulated by PENCOM and is administered by HOS. Under annuity, annuity is regulated jointly by National Pension Commission and National Insurance Commission. Under annuity as well, the investment risk resides with the insurance company. Unlike program withdrawal, where the risk and the investment return accrues based on the investment of the account. Once the premium is established and a retiree is under annuity, the investment risk is transferred to the insurance company. So the insurance company basically has an obligation to just ensure whatever has been agreed at the monthly annuity is paid to the retiree over time. Under annuity as well, the cycle of a monthly pension enhancement that I mentioned is not currently done for annuity options. So these are basically the features under the 2 withdrawal modes, and this is also something that we can always access. There's something that we call the retiree pack, is also available on our website, and it details all these things that I've spoken about. Moving on, there are other withdrawal modes that are available to retirees, and we just thought by way of information, this is also something that we should mention. There is the withdrawal mode that is called voluntary contribution. This option is available to our retirees. You know, the same when I hear a lot of people say, I'm retired, but I'm not tired. So there are instances where some of our clients who are retired and already drawing monthly pension, they get a contract of employment with an organization. And by virtue of that, the organization remits contributions for such retirees. When such contributions are made, they are remitted as voluntary contributions, not mandatory contributions. So such voluntary contributions are received, and the retirees can access it when they eventually leave that contract of employment. That is when they can access that VC. And I must mention that the tax relief that is applicable is also enjoyed. So where the such contributions are stayed in the account for a minimum period of 5 years, it will not be subject to tax. However, if it has stayed in the account for less than 5 years, it will be subject to tax in accordance with Pay As You Earn Tax Act. Also, the regulation for withdrawal is that retirees that are in this category can access that voluntary contribution 100% once they leave that employment, and that's the case. We also have what we call deceased benefit, where we have, I mentioned earlier that beneficiaries can access the outstanding balance in the retirement savings account for deceased retiree. So that is what this is about. And what we would require as a legal document is either a will that was admitted to probate, identifying the beneficiaries to the deceased client's estate, or a letter of administration that has been issued by a competent court, identifying the beneficiaries to the deceased estate. And these and other documentations will be obtained to process whatever balance in the account to the credit of the deceased retiree. There's also what we call missing persons, and for missing persons, basically it just relates to where a client has been declared missing, and the act actually envisage that situation. And what obtains in this case is that after that an individual has been declared missing for a minimum period of 12 months, a position can be made, an application can be put forward by their beneficiary or representatives, providing the police reports and other documentations to aid the commission in making a decision. Now, this decision is the prerogative of the National Pension Commission. A board of inquiry will be instituted, and that board of inquiry will look through all the documentation and the circumstances, and then where they are satisfied, they will inform the PFA to go ahead and treat as a deceased benefit. Where they do not find it adequate, they will still revert to the PFA, who will stay engaged with the representative of the beneficiaries on the feedback from the Board of Inquiries. These are the checklists that are required to assess retirement benefits. There's an application form that will be filled by an intending retiree, passport photograph, birth certificate, retirement letter, confirmation letter, of course, the bank account details where the money will be paid into, means of identification will be obtained, a valid means of identification. For those of our retirees that are opting for program withdrawal, they will execute a program withdrawal agreement with us. And for those of our retirees that are opting for annuity, they are required to execute an annuity agreement with an insurance company of their choice. Also, like I mentioned earlier, the final salary is determined from the payslip. So 1 month payslip within the last 3 months of employment is required. Also, there's a consent form that will be filled once the computation is done and the benefit is determined, so that the retiree is also aware that, okay, this is what I'm getting as lump sum, this is what I'm getting as my monthly pension. And then the letter of employment as applicable to public sector clients, that's the letter of employment and first appointment. And also provisional, I mentioned provisional annuity agreement, then the clearance. So I mentioned earlier that some states have a process for clearance, like Lagos State, there's a clearance exercise where the government issues a bond certificate. That original certificate will also be retrieved by us as your PFA at the time of retirement. So these are the checklists and requirements, that documentations that are required for assessing the retirement benefits. And I hope I've been able to clarify all the areas with regards to the documentation. Now, before I round off, there is a process that we follow, and it's important that we also let you know. Once an application is submitted, this submission goes through review. And once we have reviewed, the computation is done, and then a confirmation, I mentioned that earlier, a confirmation is done with the employer to confirm the personal details as well as the accrued benefits, to confirm that they've all been remitted. And once that is done, the benefit is transmitted to our regulator, the National Pension Commission, for approval. And once approval is received, we give an instruction to our custodian to then process payment to the nominated bank account by the retiree. At every of these stages, we send communication SMS updates to let our retirees know, okay, your application has moved from point A to point B, now it's on point C, and even when the payment is eventually made, we notify just so that we carry you along all across the processing stages. So that is basically all about the assessing retirement benefits. Of course, we'll speak more with regards to questions that you would have in this regard. Just to close out, there are several channels that we've put out to enable you to reach out to us anytime you have any need to do so. And we have created multiple channels so that we can have it at your convenience. Whether you want to visit us, we have almost 200 locations across the country that you can reach us on. We have the website option where you can log in and also interact with us. We have our contact center that is also available 24/7. You can make call across to us and our agents will reach out to you. Also, we have what we call Pension on Wheel, and this initiative we've had it for a very long time, whereby we also deploy the Pension on Wheels system to employer locations so that we make it convenient. We bring our service to you at your employer location so that we can also attend to your request on the go. Also, we have a dedicated email account, pensionsolutions@stanbicibtc.com. You can send your request to us and we'll definitely get back to you. We have the SMS Shortcode option where you can also get certain information. If you want to retrieve your PIN, for example, all you need to do is type my PIN to 30388, and then you get an automatic response that gives you the information that you need. We have our mobile app, called it Super App. You can do much more on that as well. So these are various channels that you can reach us with. It's something that we continue to revolve, to revise, and to even add, so that we make sure that at any point in time, you're able to reach us at any point in time as easily and conveniently as it can get. Thank you so much for your time. I hope I've been able to expound on ways that you can access your retirement benefits, and then we'll take the question and answer at the right time. Thank you, Colin. Over to you.
Yeah, thank you so much, Tola. Thank you for doing justice to that topic. It's a topic that a lot of our retirees or intended retirees usually ask. All these millions that I've been saving, how am I going to access it? I hope you guys are not just keeping my money. I want to be able to know how I can access it, and you've done justice to that topic. Thank you so much, Tola, for that. Yes, so you also heard from Tola the various ways through which you can reach us. That's what we see on the screen now. Please note that you can reach us in several ways. Should you have any inquiries or you have any issues you want to discuss with us. And I also want to quickly remind us that the question and answer icon, that's the question mark icon you see on your screen, you can actually click on it and ask us your questions. If you have any questions, if you have any suggestions, or if you have any inquiries, please feel free to type those requests in that chat area, and we'll do justice to that. Like we mentioned earlier, we have a couple of our colleagues in the background that will be answering those questions. And when we get to the Q&A session as well, we will do justice to those ones that we probably haven't attended to us during the session. So thank you once again for staying tuned with us. Yes, we'll be moving to the next topic. Very shortly, I will be calling on my other colleague, the Executive Director of Business Development, Stanbic IBTC Insurance Brokers. She will be doing justice. We had mentioned something about annuity, and she'll be talking about that. Ibiyemi, over to you, please. Ibiyemi Mezu, over to you, please.
Good afternoon, everyone, and thank you for joining us this afternoon. It's a privilege to be here today. I will be talking about annuity, retirement life annuity, as is noted in the PENCOM guideline. This is an important topic for us because there's usually a lot of mis-selling. You have a lot of information out there, conflicting information, if I may say, with respect to what retirement life annuity is. And we believe that it's important to just provide proper guidance and also answer whatever questions that you may have. But before I move on into what retirement life annuity is about and also the different options that are available, I would just like to start off quickly by giving a brief introduction as to who we are and what we do. As you all know, Stanbic IBTC Holdings is an end-to-end financial service provider. We have several subsidiaries within the group, and our aim is to be able to provide financial advisory and support to our customers. So regardless of what your financial needs are, there is an expert within the group that can provide proper guidance and also handhold you throughout that process. So at Stanbic IBTC Insurance Brokers, please next slide. We actually are licensed by the National Insurance Commission. So we're not licensed by PENCOM, we're licensed by NICOM. And our role is to provide advisory to customers when it comes to insurance. So regardless of what your insurance needs are, whether it's for general insurance or for life insurance, annuity is a life insurance product, and that's why I'm here this afternoon. So our role is to provide advisory and guide customers. We would also provide options to customers. So rather than trying to engage different insurance companies by yourself, we make that really easy for you by providing you with the different quotes available, and we let you know what the terms and conditions are across board, and also help you in that process of transiting depending on what your options are at retirement. Next slide, please. So I've spoken briefly about who we are. We typically start off with the risk assessment. Now, you may be wondering why risk assessment, how risk assessment comes in when it comes to your retirement. The truth is, when you have to take a decision as to whether to go with program withdrawal or annuity, and like my colleague said, those are the primary options that you have at retirement. One of the things we start off with is just asking you the right questions. What exactly are your needs? How old are your children? Because these are things that truly guide your decision at retirement. And also, we would engage the insurance companies on your behalf, provide different quotes so that you can have a good view of what is available out there. And in the case of a claims, we're also available to support your beneficiaries. In the case of life insurance policies, we would support your beneficiaries and help them to get the whatever is due to them paid out as quickly and as promptly as possible. I would also like to mention that within the group, as some of you may know, we also have a licensed life insurance company. So, I mean, this further enhances our bouquet of offerings to all our clients. So whether it's program withdrawal that you want, or you want annuity, there's a life annuity business within the group that is able to provide you with that annuity. And as a broker also, we're able to help you to engage other insurance companies. So everything that you require at the point of retirement, you're able to find within the group. Can we skip 2 slides forward, please? So I would move on to talk about retirement life annuity. Next slide, please. So retirement life annuity is a retirement product that has been approved by the National Pension Commission. And I'm emphasizing approved because it's an option, it's a valid option for you at the point of retirement. Now, I'm sure you all know that your PFA does not provide annuity. And because they don't provide annuity, this is done by the insurance companies. And insurance companies typically are licensed by the National, the Insurance Commission in Nigeria. Now, between NICOM and PENCOM, they both jointly regulate and supervise retirement life annuity. So even though it's an insurance product, PENCOM ensures that the guidelines are adhered to. And not every insurance company is able to offer this life annuity product. You must be approved to provide this. And this really just provides, proper supervision, making sure that indeed when people opt for life annuity, they do get paid based on the guidelines and as PENCOM has specified. So it allows for you to collect your pensions either monthly, quarterly, or annually, depending on what you want. And the fund also does not reside with the insurance companies. One of the things that PENCOM has done is to ring fence anything retirement funds in Nigeria. So even at the point of retirement, when you opt for annuity, the money doesn't get transferred to an insurance company directly. It actually stays with the custodian that has been appointed by the life insurance companies. And this gives further security to the funds and ensures that regardless of what happens to the insurance company, you would continue to get your pensions for life. I'll move on to describe the features of the life annuity. I think my colleague already alluded to some of the features earlier on. And one of it is that the payment is for life. And you also have 3 different options that you can opt for at the point of selecting. Now, the more common annuity product is what we call a level income annuity. This allows you to get an amount, the same amount for the rest of your life. The insurance company would continue to pay you, whether the person lives up to the age of 80, 90, 100, it doesn't matter. So long as the person is alive, you would continue to get paid your monthly pension. It usually gives the highest, in terms of what you're going to get, because again, when I go into the features, you would understand why these different types of annuity would vary in terms of payout. The level income usually pays the most when it comes to monthly pensions, quarterly or annual pensions, and it is guaranteed for life. Now, when we say it is guaranteed for life, it means that if anything happens to the retiree within the first 10 years, the amount that should have been paid for that 10 years is guaranteed, and that amount is what goes to the beneficiary. However, after 10 years, if the retiree should pass on, the beneficiaries don't get anything. So that's the general feature for the level income. The second one is the spousal option. Now, this option allows you to add on your spouse. For a lot of people, major concern for them is if they pass on at retirement, who continues to take care of their family, who takes care of their spouse. So this option allows you to add on your spouse to the policy. So the policy, it effectively will be covering 2 lives. In the case of death of the primary holder of the policy, the spouse would continue to collect the pension. And again, the pension will be paid throughout the lifetime of that spouse. The third option is what we call an increasing income. What the increasing income does is it allows you to get a higher payout on an annual basis. So if you start off with maybe 100,000 per month this year, at the next anniversary, that amount grows by either 5% or 7.5%, depending on what you have agreed to at the point of signing off the contract. So these options really allow you to match your needs at the point of retirement. Now, the first feature that I would like to speak to, and this is common to all of the different types of the annuity products that, like I mentioned, one is that only approved insurance companies are able to offer annuity in Nigeria. Not every insurance company, not every life insurance company can do this. Secondly, the fund is regulated and supervised by NICOM, the insurance regulator, and the National Pension Commission. The second thing is flexibility. Now, computation can be either monthly, it can be annual, it can be quarterly. But let me also mention that different insurance companies will give you different rates. Unlike what you would find with program withdrawal, where the template is as issued by the Pension Commission. That template, if you put in the same information, depending on, regardless of who is using it, the output is usually the same. But with the insurance annuity, insurance company A may give you a different rate, and insurance company B may give you a different rate. So it always pays to shop around at the point of retirement so that you don't just settle for the first insurance company that comes your way. And that's the benefit of talking to a broker, because we're now able to engage multiple people on your behalf, and you have an idea of what the different insurance companies can give you. I've already touched on the bequest motive. Because oftentimes people confuse the 10 years guaranteed period. They say, oh, does this mean that annuity will pay me for just 10 years? What is the 10 years guaranteed all about if you have said to me that money is going to be paid to me for life? So I'll just explain again. Annuity pays for life. You would continue to earn your pensions until death, regardless of when that time comes. However, what is guaranteed is what goes to your beneficiaries. So if that happens within the first 10 years, say year 6, the insurance company will pay to your beneficiary what they would have paid to you in that first 10 years. Oftentimes, this is what actually goes into the account as a premium plus a little bit of a return on investment. So that is what is guaranteed to your beneficiaries. If that happens after 10 years, then your beneficiaries will not get paid anything. Next slide, please. So moving on to the other features. Sorry, can you move on to the next slide, please? I've already spoken about the safety of the funds. The money stays with the custodian. As such, if anything happens to the insurance company, you are rest assured that your money is in safe hands. Nothing is going to happen. You will continue to get your pensions. I've already spoken about the payment types. It can be monthly, it can be quarterly, or annually. Now, investment is also another key feature that I would like to highlight, because having worked for a number of years and having your pensions with the PFA, you're probably used to your PFA giving you a statement of account. When you're up for retirement life annuity, you don't get a statement of account because there's already a contract to pay you an amount. So whether the insurance company makes good returns on investment or average returns on investment, it really doesn't matter. They would continue to pay you that amount. So you don't get a statement of account. And whatever return that the fund generates, it actually goes back to the pool. And that is what is distributed to all the annuitants. And then the last thing I would like to speak on quickly is on the transfer option. Now, with retirement annuity, once you have opted, you've moved to retirement annuity, you cannot come back to program withdrawal. However, if you're on program withdrawal, you can at a later time decide, oh, I want to do annuity. But once you move on to annuity, you're not able to come back to program withdrawal. These are the major features and things that you must have in mind when you're deciding whether you want program withdrawal or you want retirement annuity. Now, for next steps, at the point of retirement, Tola already spoke about all the documentation. This slide just speaks to the documents that you may require, that you will be required to provide for you to opt for retirement life annuity, and it's just as straightforward. Once you indicate, you can reach out to either us or you can go directly to a life insurance company or any other insurance provider that you decide. It's not compulsory for us to route your retirement annuity needs through us, but you must provide a quote from the insurance company, and following the quote, you would also be asked to fill a proposal form. Once the proposal form has been filled and different documents are provided as noted on this slide, you would submit all of that to your PFA. They will process to PENCOM, and once approval is paid, your fund will be transferred to the custodian of the insurance company, and you would you would start to collect your pensions going forward. So in a nutshell, that's what retirement annuity is all about. I would like to thank you once again for the opportunity to present to you today, and happy to take your questions. Thank you very much, everyone.
Yeah, thank you very much, Ibiyemi. You've done, justice to that, to the myth around annuity. I know a lot of retirees always have that questions about annuity, the difference between annuity and program withdrawal, and you've been able to do justice to that, to clarify those myths and those misconceptions, regards to annuity. So thank you so much, Ibiyemi, for that wonderful insight that you've given to us. All right, thank you everyone for staying tuned, for staying up to this very moment. We really appreciate your presence. We thank you for taking time out of a very busy schedule to attend this session. I can see that there have been quite a number of questions that have been asked in the Q&A segment, and majority of those questions have actually been answered. But just like we promised at the beginning of the session, we'll look through for those questions that haven't been attended to, that haven't been tackled. We'll read them out here and have some of my colleagues attend to those questions. We have a couple of them. I can see the first one here. I think this is for Ibiyemi. The first question here is, what are the risks with annuity option against program withdrawal? Ibiyemi, I think you can help us shed more light on that question. Ibiyemi, over to you.
Yes, thank you very much, Kole. I think I sort of addressed this in my presentation. Because the funds don't reside with the insurance company, I mean, that would be a concern for me if you're telling me to go to an insurance company and that insurance company will pay me for life. I would have concerns as to whether that insurance company will be available or alive in the next 20 years or 30 years, as the case may be. But what the Pension Commission has done is to ring-fence the pension fund, just like they have done on the side of the PFAs. The money doesn't reside with the insurance company, it resides with the custodian. So the same safety that you would enjoy under program withdrawal is what they have extended to annuity. So regardless of what happens to the insurance company, your pension fund is ring-fenced and you're guaranteed to continue to collect your pensions for life. So I hope that answers the questions. Thank you.
Yes, EBME, please don't go. I think a lot of people are interested in the annuity discussion. So I have another question here, which says, according to features of program withdrawal and annuity, the monthly pension of retirees is at least 50% of final salary, but IBTC retirees are not being paid up to 50% on their terminal salary. Okay, I think this is actually, well, this will be for Tola. Tola, please, if you can, yes, this will be for Tola. Yeah, so Tola, please, can you help us just quickly address this wonderful question?
Wonderful. Thank you, Ole. Just to speak to this, so as I mentioned earlier, contributors who are retiring are able to access 50% of their final salary. Of course, there are a few instances, and I'm saying this because most people are able to access 50% of their salary as the minimum. You find out in other cases that you can actually even get more because there's an inverse relationship also between the lump sum and the monthly pension. So we've seen instances where you even don't want to go for your maximum lump sum of 50%, you go for something lower so that you can get a higher final salary. But for a few instances that where the logic doesn't come true, where you see that the 50% of final salary is not what is applicable, would be instances where based on the parameters that you for computation, the age, RSA balance, gender, and the final salary, final emolument itself, you realize that, for example, someone has only worked for 1 year or worked for 2 years, and then that balance is what you're also putting forward. Don't forget the expected lifespan for computation based on the mortality rate is 82 years for men and 84 years for female. So based on that, if you're going to do a spread out and the expected compound interest that would apply over the period of years, if you haven't actually worked for a certain period of time to get a balance that is accrued to determine that 50%, and we've seen that instances. So I'm speaking with respect to a live example where someone worked for 1 or 2 years and then the person became 50 years and was retired. So the benefit of compound interest and all of that should have helped to enhance the RSA balance for the competition isn't seen in that competition. But like I said, those are a few instances. In most cases, people actually, based on the template, are able to access 50% of their final salary.
All right, thank you very much, Tola. But before you go, although I have another question for EBME, but before EBME's question, I would like you to answer this, Tola. Someone had asked it to say, in case someone on program withdrawal gets another job that will contribute pension, how would this play out?
All right, thank you, Ole.
Did you get that, Tola? Okay.
Yes, can you hear me? Yeah. So I
Yes,
spoke to this under the voluntary contributions earlier, that once someone is on program withdrawal, and by virtue of the fact that our retirees are never tired, so we get another employment. That employment where contributions are made, it comes in as voluntary contributions. So such monies are assessed as voluntary contributions once the retiree exits that employment. Once you exit that employment, you can come forward and apply for that voluntary contribution, and the 100% of the amount can be paid out to the retirees.
All right, thank you very much, Tola. I like that our retirees are not tired. Yes, yes. So, EBME, this question goes to you. What determines the percentage of our pension transfer to an appointed custodian in case of life annuity?
Thank you very much, Kole. I will just try to rephrase the question because it's not a percentage of your retirement that goes to the custodian. It's actually all of your pension that is transferred. However, you do get a lump sum under the retirement annuity option as well. So it's only after your lump sum has been deducted, the balance is what goes to the custodian that has been appointed by the insurance company.
Okay, thank you very much for that clarification, EBME. I think I have one or two more questions. I have one here. If you're already on the life insurance, how can the retirement benefit be merged with the life insurance? Did you get that?
Sorry, Colin. Yes, I did. Yes, I got that. And the question is asking if it is possible to merge an existing life insurance policy with your retirement life annuity. The simple answer to that is no, you're not able to do that. Your pension fund remains your pension fund, and both have their benefits. Your pension fund is supposed to pay out to you on a monthly basis, whereas a life insurance cover actually takes care of your beneficiaries in the case of death. So if you pass on, whatever you have set as your sum assured is paid to your beneficiary. Now, while your retirement life annuity can also pay to your beneficiary, you're not able to merge both because they're two different things. And like I said, the way that the retirement life annuity is managed is very different from other conventional annuity products that you would find with insurance companies. Thank you.
Okay, thank you very much for that clarification, EBME. So you can't merge both, you have to do them separately. The one for your pension is separate. Okay, I have another question for you, EBME. I think everybody is interested in what you've spoken about. Someone here is asking, how does a spouse come in annuity when not part of the contribution? I hope you understand the question. Please help us do justice to that.
I do, Kule. Thank you very much. I mean, I get that a lot. You know, people are not, they want to know, why do I need to add my spouse? But like I mentioned earlier, it is an option because there are people that have concerns. You have, a young wife. So if, for example, you retire at the age of 50 and your wife also is maybe 45 or so, what you don't want is, in the case of death, there's now long story as to who continues to pay her allowance, and I've used male, female. It can also be the other way around. So it doesn't matter that the person did not contribute into the retirement savings account. It is your option. You opted that if anything happens to me, I want my spouse to continue to collect the pensions on my behalf or in my absence. So it's an option. However, I must say that what we have seen typically is that option pays very low because you're more or less insuring two lives. So imagine that somebody retires at the age of 50 and passes on at the age of 60. If the spouse is still alive, the insurance company will continue to pay the spouse until whenever. So you're actually insuring two lives, and as a result, the payout is usually lower than what you would find under the level income, and even sometimes lower than what you would get under the increasing annuity. But like I said, it's a choice that you have and an option that you can opt for at retirement. Thank you.
Yes, thank you so much, Ebeyemi. I like the way you clarified that. So it's possible, but you've also mentioned the pros and cons and the characteristics of that particular option. Yes, in fact, I must say that this session has been one of the most engaging sessions we've had so far. There've been a lot of questions, which we really appreciate. Please keep the questions coming. We still have about 8 minutes, to answer those questions. So I have another question here. I think this is, I would say, targeted at Tola. The question is, what do you mean by lifespan? Does it translate to 80 years?
All right, thank you, Kunle. So I mentioned life expectancy table, one of mortality table that is incorporated into the computation template for program withdrawal. And the expectancy numbers there, we have 82 years actually for male and 84 years for female. Yeah.
Okay, thank you so much, Tola. Another question for you. Okay.
Sorry, pardon me, just to add quickly. So when we say life expectancy, this is used for computation. I must make that clear that even where RSA balances are exhausted, the commission is putting in place what we call a minimum pension guarantee, which means that if you a retiree is still alive beyond that expected period, they are still able to earn more pension. Of course, that will be provided for and determined based on the guideline that will be issued in that regard. But the computation basically is done. It's more of the guidance. Yeah.
All right, thank you so much, Ola. I like the fact that you quickly, clarified that bit of life expectancy. We get a lot of that question most times, like, okay, do you mean that after that time, you people will send someone to take me away? But I like the fact that you quickly clarified that. Yes, so we have a few more questions. So Tola, this is to you again. Why must retirees checklist be that long? You are able to reach people through different medium. Why put a retiree through the stress of submitting additional documents? Tola.
All right, thank you, Kunle. And let me first start by saying that the pension administration system has evolved over the past decade, and I can tell you for sure that what we are getting or having to do today is a lot much more easier than when we started, and it will continue to improve. We'll continue to see how we can minimize customer effort as much as possible, but that would not take away the fact that there are due diligence that we do. From what we've seen as operators, we've seen all sorts of activities, people trying to take over people account under false pretense and all of that. So we have responsibility for due diligence as well. And we cannot, for the sake of anything, put the savings of our customers at jeopardy. So basically that's the reason why we have certain documentations that we have to obtain so that we are validating all the records properly before disbursement. Thank you.
All right, thank you very much, Tola, for clarifying that as well. We have another question here, also for Tola. Someone who has worked with various private organizations, what letter of employment will be presented? I believe this is to PENCOM at retirement. What letter would this category of persons present?
All right, thank you. So the letter, the retirement letter or the exit letter as it applies will be from the last place of employment. From the last place of employment. For our clients in the public sector, because of the reconciliation of accounts and all of that, they are the ones that will require their first letter of appointment, which will be from the first place they worked in the government system. And because that is used to determine their accrued rights from when they actually started working. But for clients in private sector, just their retirement letter or exit letter from their last place of employment is required.
Okay, thank you very much, Tola. The questions are coming in, but I believe we're answering those questions also in the Q&A segment. We have just about 2 minutes to go. I think we should be able to take one more question here. Okay. I can see here, what is the expected time frame for the benefit application process stages? Basically, how long does it take for a retiree to get his money paid?
So I'll say it's relative. And if you follow my explanation earlier, there are other stakeholders, like there's a confirmation we also do independently with the employer. And we deploy all avenues of ensuring that we get those feedback as quickly as possible. So it's relative. Sometimes it can be much more earlier, and sometimes there can be a delay if those engagements don't yield the desired outcome quickly. So I won't say it's 5 days or it's 10 days. It's relative. But what we do is to ensure that whatever needs to be done, as far as other stakeholders are concerned, we get that closed out as quickly as possible. And that's also why we make sure that we provide updates at every stage to the retiree.
Yes, thank you so much, Tola. Thank you so much, Ibigemi. You guys have done a lot of justice to the questions that have been asked. So at this point, I know we have about a minute to go, but we'll also still keep the Q&A session active even when we end this session, so that we can attend to as many questions as possible that may have been asked in that segment that we haven't attended to. It's been a very, very interesting and engaging 1 hour. And in fact, we really want to appreciate every one of you that have attended this session. We are really appreciative of you finding time, to join us in this session, so that we're not just talking to ourselves. At least we see that people are actually participating and asking questions. So we're eager to do more. This is not the end of the series. We've had a session last week. This is the second session we are having now. And we want to also implore you all to please stay tuned and join the next session, the final session for this series, which is next week, same time on Thursday, 16th September 2021. And that is also going to be very interesting. And, we believe it's going to be engaging as well. We'll be talking about financial fitness while in active service and at retirement. Just like Tola mentioned earlier, our retirees are not tired. And we know that you're not going to be tired. You still want to be active in one way or the other, which is the reason we want to talk about your financial fitness. What should you be doing, at retirement with regards to your finances? So at this point, on behalf of the entire staff and management of Stanbic IBTC Pension Managers, we want to thank you all. I'll call you all the MVPs for finding time to join us. I want to thank you all and appreciate your time. We hope to see you again next week for the financial fitness session. From me and the rest of the crew, we want to say thank you and goodbye. Stay blessed.